Hello, today we are solving October 2024 paper Unit 2 question number 4. Narayan Ganj Print Works PLC is considering an investment project of purchasing a printing machine. The printing machine will carry out the printing jobs for customers. You are the accountant of Narayan Ganj Print Works PLC and you have been asked to report to the management as to whether the new printing machine will be a worthwhile investment. The following information is available for years 1 to 5 for the investment project. Okay, so they have given different investment costs here. The printing machine, it is going to cost 27,000. It is going to last for 5 years, after which time it will be sold for 1,050. Then it has other costs. It's going to complete some, it is going to earn revenue. It's completing an average of 8 printing jobs a day, 300 days for the year, and the average price is £98. Then it is also going to require one member staff who will be paid at the rate of £12.4, okay, working 8.5 hours a day. Average electricity cost is going to be this much, and the cost of paper and ink will be 45. Other costs with the machines will be £240 per month. The cost per capital will be 8% per year. Okay, the cost of the capital will be 8% per year. This is the discount rate that's taken into the account. The discount rates for the cost of the capital will be 8% as shown below. What is a discount rate? Okay, it means I'm going to include a factor called as discount factor. This will be used to estimate the present value, okay, of any receiving £1 in the future based on the expected date of receipt and the discount rate assumptions. I'm going to use the discount factor. Okay, it is going to usually use for calculating the present value of the project of any. I will have the discounted rate. Okay, that's going, and then I will have some net cash flows. Okay, cash inflow minus cash flow happening within the business because of this project. Okay, for 5 years, right? So I am going to use those uh, this net cash flow, that net cash flow, okay, that's happening within the business, and then I'm going to use it for the discount rates that's going to happen every year. Okay, that means the investment is going to get me some money and revenue, and the discount rate, okay, is going to accounted. So I will have a discounted cash flow, which means that this is not an actual cash flow. I will use a discounted cash flow, and I will calculate what is the net present value of the printing machine. So if I have the discount factor is at the rate of 8% they have given. So for at a discount, and there is a formula for calculating the discount factor. The discount factor is going to be 1 divided by 1 plus the discount rate to raise to the power the year. Okay, this is the discount factor. So 1 divided by 1 plus 0.08 raised to the power 1. Okay, this is the formula for that thing. So raised to the power 1, raised to the power 2, 3, 4 and 5. So these are the discount factor. Okay, so then you calculate the discount factor using this formula and the discount rate, okay, for every year. Then you will get some values. So the values you will include here, they have already given, or you can calculate using this formula. So then the discount factors and times the net cash flow, I will get the discounted cash flow that's going to happen because of this project. And once I have a discounted cash flow, I will add up the total discounted, okay, discounted cash flow starting from the investment minus the other net cash flow that's happening. So I will calculate what is the net present value of this printing machine. Okay, so by adding this values, okay, for the first one, it will be, I will start off with a negative of that investment, and then I will have the positive net cash flows for the project, and I am going to use a discounted rate. I'm going to give some discounts. Okay, that means it will not be actual net cash flow but at a discounted rate, and then I'm going to subtract all this, and I'm going to calculate from the net present value, okay, of the project. So the first question is calculate the net present value of this investment project. So for this, first let's understand Okay, what is the net cash flow happening because of this printing machine they are going to invest? The first one is there will be some cash inflows and cash outflows due to the costs occurring. Okay, so let's calculate first the cash inflow and cash outflow, and when you subtract these two, I'll get the net cash flow for this project. Okay, so first one is the revenue. The revenue is going to be equal to, okay, the revenue is going to be equal to, we are saying that they are going to earn 98 pounds from a customer. How many customers are there? There are 8 customers. Okay, and they are going to work 300 days for the year. So let's include all that. So first one is, there is 90, there are they are going to have 8 customers. Okay, 8, and they are going to work for 300 days, and the rate is 98 pounds. So that is going to be equal to 235 200 pounds, 235 200 pounds. Then you have the cash outflow from the costs. Okay, let's include. First one is the staff cost. The staff is going to be paid as 12.4 pounds, and they are going to work for 8.5 hours a day, and they are going to work for 300 days. So what is the staff cost? So there is one staff, okay, and they are going to work for 8.5 days, and 300 days they are going to work, and they are going to be paid at the rate of 12.4 pounds. So this will be the staff wages or the staff wage cost. So 8.5 times 12.4 times 300, so that is equal to 31,620. Okay, that is equal to 31,620. Then we have the electricity cost, that is equal to 35 pounds per job. Okay, how many jobs are there? There are 8 jobs, and it happens for 300 days. So let's assume there are 8 jobs, and it happens for 300 days times 35 rate. Okay, so that value is going to be equal to 8 times 300 times 35, 84,000. So 84,000. Then paper and ink. Okay, paper and ink, it will be 45 pounds. Okay, paper and ink, it will be 45 pounds. So that is how much is the cost. Okay, it is it is 8 jobs. Okay, 300, and the rate is 45. So that value is going to be 108,000. 108,000. Then you have other costs. Okay, you have other costs, that is 240 per month. So there are 12 months, and the charges is 240. So 12 times 240, so that is equal to 2,880. 2,880. Okay. Now these are the other costs. Now let's add up these costs. 31,620 plus 84,000. Okay, so 31,620 plus 84,000 plus 108,000 plus 2,880, that is equal to 226,500. So the total cost is going to be equal to 226. Okay, it is 226. Let's write it revenue here. So the total cost will be equal to 226,500. Now let's calculate the net cash flow. So this is revenue minus this 226,500. This is 8,700. So the net cash flow is 8,700. Now, okay, now let's start calculating the net present value. Okay, the net present value of the machine from the total discounted cash flow. Okay, I'm going to from the net discounted cash flow. Call it as net discounted cash flow. This is the net discounted cash flow. First one is the investment. Okay, I'm going to take the investment as negative. Okay, so 27,000. So 27,000, you take it as negative. Okay, from that I'm going to subtract the net cash flow that's happening, okay, every year as positive. So I'm going to take the investment as negative, and the discount rate when it is invested, it is at £1. Let's assume that. So let's write here. So that for the first year it will be negative 27,000. Then at the first year the net cash flow happening is 8,700. 8,700, and the discount factor that you will consider for the first year will be 0.926. So it will be equal to 0.926. Now let's multiply these two, that is 8,056. So 8056. 8056. Then next one is the next year, the next cash flow, okay, will be, so you multiply 8,700, okay, times 0.926. That value is 8056.2, or you can just round it off to 8056. Next one is 8,700, and the discount factor will be 0.57. So let's write it here. So and then multiply it, okay, 8,700 times 0.85, okay, 0.857. So that is equal to 74455.9. I can write it as 74456. Okay, so I am going to round off this value to 7,456. Okay. Then next one is the third year, the net cash flow is going to be again 8,700. Okay, 8,700. So let's write it here, 0.794. Okay, so multiply it, 8,700 times 0.794, that is equal to 6907.8. I'm going to round this off to 696,908. Okay, then the net cash flow for the fourth year, the discounted factor is 0.735. So 8,700 times 0.735, that is equal to 6394.5. So I am going to write it as 6395. Okay, 6395. Okay, so in the fifth year, what you are going to do is the net cash flow is you are going to have, okay, 8,700. Okay, and you're also going to get 1050 extra. Okay, so it is equal to 9,750 in the fifth year. Okay, because they are saying that it is going to be sold for this much. Okay, 1050. So there will be a cash inflow at that time. So 8,700 plus 1050, that is 9,750 will be the cash net cash flow So, and the discounted factor for that year will be 0.681. So 0.681. So when you multiply, its value is going to be 6640. Now let us add up all this and get the net present value. So negative 27,000, negative 27,000, okay, plus 8056 plus 7456 plus 6908 plus 6395 plus 6640. So that is equal to 8455. So that will be the net present value. So 8455. Next one is calculate the annual profit of the investment project. So let's calculate the annual profit for this project. So profit is, we know that the net cash flow is this much, less we have to include the depreciation amount, and then we will have to calculate the annual profit. So that's how you will calculate the net annual profit. Okay, so the net cash flow, we had already calculated the revenue and the other costs. Okay, that is the net cash flow that's happening. We can take that directly. That is 8,700. Right? So 8,700, okay, pounds here. Then depreciation amount we have to calculate here. The depreciation amount will be equal to, so the cost is 27,000, and then it's going to be, okay, the value it's worth is going to be minus 1050 at the end of 5 years. So this will be the depreciation amount that will be used. So it will be equal to 5190. 5190. So now let's calculate the annual profit. So the annual profit is going to be 3,510 is the annual profit from this project, investment project. The internal rate of return has a formula. The formula used is lower discount rate percentage plus the difference between the percentages. Okay, there is a lower return rate percentage and there is a higher return rate percentage. So 8%, and then they want you to calculate internal rate of return when the net present value with the cost capital of 20% is given. So now the net capital value, okay, net present value at 20% is a higher discount rate. So you will calculate the difference between the discount percentages times the NPV at the lower rate divided by the total NPVs. Okay, we have to calculate the total NPV. So let's calculate each of this and calculate the internal rate of return. First one is the lower discount rate, that is equal to 8%. Then what is the difference between the percentage? Okay, what is the difference between the discount rates? Okay, difference between the discount rates. So let's calculate that. Given. So the next one, that is equal to, now the discount rate is 20%, earlier was 8%, so that is equal to 12%. Okay, this is the difference between the discount rate. Now this part of the formula we have to calculate NPV, okay, NPV divided by, at the lower rate divided by the total NPVs. So that is equal to, NPV at the lower discount rate was 8455 divided by 8455 is a lower discount rate, plus they have given NPV at the higher discount rate is 987. So you add up and then you will get a value that is equal to 0.896. Now let's substitute and find out what is the internal rate of return. So the internal rate of return will be equal to internal 12 times 0.896, that is equal to 10.752 percentage. So 8 percentage plus, okay, plus 8, that is 8 percentage plus 10.752 percentage. So that is equal to 18.75 percentage. 18.75 percentage. So this is the internal rate